Good afternoon, everyone. Thank you for joining us for a panel on DeFi Infra with a focus on aggregation, pricing, and interoperability. Before we jump into things, let's first get a quick introduction from our panelists. Maybe your name, your role, what you're working on, and then we can jump into things. We'll start at the end.
Cool. Jenya Mikhalchenko from Duro Labs and PIF. I lead business development, which basically looks like managing all the deployments that we do on the various chains, managing some of the price feed launches. And one of the topics we're going to talk about today is aggregation. So we're going to talk about our RFQ that we manage as well. So yeah, excited to be here.
My name is Cengiz Dinçoğlu. I'm the co-founder and CEO of Dexalot. We've been building since 21. We are in spot order book DEX that spans over multiple chains. We have an omni-chain design that I want to talk about. Thank you.
I'm Michael. I'm CEO of SwapKit. SwapKit is a cross-chain DEX aggregator. We're an open source SDK and API focused on native asset swaps across blockchains that don't typically talk to each other. And we have a big focus on Bitcoin especially.
This is Sinan from Rango Exchange. I'm a co-founder of Rango. We started Dexalot in 2021. Rango is a cross-chain aggregator supporting over 70 blockchains and powering cross-chain swaps to tier 1 wallets and the apps that you use in daily life.
Perfect. And my name's Salty. I'm your moderator today. I work with Nebula Agency. Nebula is a Web3 accelerator. So we work with projects on their growth, kind of regardless of where you are in your life cycle. We do BD partnerships, KOL management, everything in between. So thank you for introducing yourselves. Let's jump into things with our first question. So each of you is tackling a different piece of the DeFi puzzle, from order books, pricing data, cross-chain routing. How is your design changing day-to-day DeFi experience for traders, institutions, LPs, etc.? Maybe, Jenya, we'll start with you.
Yeah, I'll start. So basically, our core business and our bread and butter is providing price feeds on chain. So the reason why this is important is because all of your favorite DeFi apps that you use, whether it's borrow lending or perp dexes and some AMMs, they all require a data substrate in order to accurately price the assets that you're trading on chain. And so the way that we do this is we have a network of over 100 different data publishers, so market makers, HFTs, prop shops, sexes, dexes. They send us in all of the bid and offer data for the assets. We aggregate it, we sanitize it, we create a price feed, and then those price feeds are used by some of the biggest projects across all the ecosystems. So, Jupiter, Drift, Athena, and many others. And so we're basically a core piece of infrastructure that enables DeFi protocols to exist and to accurately price the products.
For us, we are building the liquidity layer, being a chain agnostic and bridge agnostic Dexalot. First of all, we are in our own Avalanche L1, and we are already connected to multiple chains, most of them EVMs and Solana in the works, where you can deposit in one chain and withdraw another. So in a way, you can use us as a bridge, but in the meantime, when you come to a Dexalot L1, you can trade in an order book DEX, your spot orders. We're not perpetuals yet. We have a secondary flow where we have conduit contracts to all the aggregators in all these EVM chains, Ethereum's and L2s, Ethereum, BNB, Arbitrum, Base, Avalanche. And these conduit contracts, we do an RFQ model to reflect our L1 prices to all the aggregators. So if you have traded in one of the aggregators in any of these chains, it's very possible that you had Dexalot order books in the background. The third flow that we support is cross-chain trades. And our difference is we have guaranteed delivery and limit prices. So once you sign the message, that limit order price that's the price that you get. And that gets delivered. No reverse at the end of the transaction.
Yeah, at SwapKit, we're really focused on bringing the whole idea of crypto and being your own bank to real life fruition, right? So it's really cool to see, adoption of crypto across the space. But what's been frustrating for me, I was an early Bitcoin adopter. I got into Bitcoin because I was into hard money, because I thought, the world deserves better money. We can't live in this situation where, central banks can just print unlimited supplies of funds. And I learned about Bitcoin. I learned about crypto. I thought, what an amazing revolution. Started using these products. And then, as the ecosystem grew, to be able to actually, make trades and to actually use the products, all of the solutions in the beginning were centralized. So if you wanted to trade your Bitcoin for stablecoin or any other asset like Ethereum, you had to do that through centralized providers. Over the last few years, we've seen, I guess, close to a decade now, the DeFi revolution really start to come in. But it's been limited to which chains are exposed, which types of assets you can use. And we see a lot of users, even if you teach them about self-custody and, they learn about the importance of not your keys, not your coins. Ultimately, we see a lot of users still go back to centralized exchanges when they need to make trades, when they need to make swaps, when they need to actually do things, maybe take out a loan, maybe they want to trade perps. All those things still happen through centralized exchanges. So what we're trying to do with SwapKit is bring the tooling so that users can actually live on chain and swap the assets that they want to. And that's kind of the first use case. But, we've heard things like, perpetuals or order books. All that stuff is going to be improving on chain in the coming years. And we want to make sure that we're bringing that to where the users live, inside their wallets, where they can hold things securely. They can be their own bank. They can actually use crypto instead of just using, some private database that claims to be the crypto asset that they're actually trying to trade. So that's our focus, is really bringing DeFi to the users in an easy, accessible way.
So regarding your question about how our product has helped users, Rango, our initial idea was formed in 2021. We had DEX aggregators like 1inch aggregating different DEXs on a single chain. We had this idea to aggregate different DEXs and bridges on multiple chains, and we have built this protocol on this idea to make the UX of crypto much more seamless and much more easier for the users to use and understand. And now Rango supports over 70 chains, Solana, EVM-compatible chains, Cosmos ecosystem, Starknet, Sui, Tron, Ton, and a few others, XRPL and Stellar. And the idea has been to make hide the abstract away the concepts of blockchains from the end user. We have an interface that you can connect any wallet that you have. We have an API that's integrated into different wallets that people are using, like Trust Wallet, Binance Web3 wallets, Exodus, MetaMask, etc. And it has been our first step to make the crypto experience feel seamless. The first step has been swaps, and I think we have delivered a good experience in cross-chain swaps. Users on Trust Wallet or any other DAppN wallet don't need to think whether they're swapping a Solana token to a Sui token or an EVM token to a Ton blockchain token. So I think that's how Rango has helped users swaps both on-chain and cross-chain.
Amazing. Yeah, I think, when it comes to obviously all the different things you guys are doing to help make the user experience better, there's always trade-offs in some way, shape, or form, right? So whether it's real-time data or execution or routing, usually you'll have some sort of trade-off in speed, accuracy, or cost. Different iterations of the blockchain trilemma. Individually, what trade-off are you maybe leaning into most, and why do you think that choice creates the best impact for your users moving forward?
I think the most important criteria in Rango has been security, reliability, and accuracy. The cross-chain ecosystem has been prone to multiple hacks, has been the weakest part of the crypto ecosystem, in my opinion, in the past years. So we have always prioritized security. We wanted to create a brand that when user sees Rango, it would be the user would be feeling safe to just initiate the swaps, not worrying that if I give approval to this contract, my funds might get lost. So we have optimized for scalability. What our top priority has been security, and definitely we have, due to paying more attention to this concept, we have delayed development in our smart contracts and EVM Solana, but in the end, our user funds have been always safe.
Michael, obviously you talked a bit about what you guys are doing at SwapKit, and I think that it directly relates to that user experience. Is there anything in particular that you guys feel like maybe you are making that trade-off and that has obviously showed dividends for you guys?
Yeah, the first thing that comes to mind with trade-offs is that when you move things on chain, especially if you start to deal with slower chains like Bitcoin, you're going to give up speed. Basically, things are going to be much slower. So if you trade Bitcoin, in your Coinbase wallet, it's IOU Bitcoin that Coinbase really has in their wallet, hopefully. But when you start to move on chain, you have the advantage of self-custody, but you also have the disadvantage of moving with slower speed there. So there's some things that can be improved. There's a couple protocols that are working with getting creative around like zero confirmation for certain limits and things like that. But one thing where we really don't want to have to compromise is on making the user have to do some basically gymnastics to get from asset A to asset B. So one of the things that we do is we only have a single transaction experience. So if you're going to go from, maybe you have some Solana token in your wallet, maybe you're not a big fan of Elizabeth Warren, so you bought a bunch of Horn like I did, and then you want to get it settled back to Bitcoin because it went down by 95%. So, you cash out, you go to Bitcoin, but historically, you might have to go, do that on Solana, then go find a Solana bridge. And, hopefully you can find one that gets back to Bitcoin. There's a few of them now. A couple of years ago, there was basically nothing. But with SwapKit, if we offer that trading pair, we're going to do it in a single transaction so that the user doesn't have to think, okay, I'm on step 1 of 6. How do I go get gas? I'm going to go back to my centralized exchange and get the gas to fill in the gap. So, that's one of the things that we're really focused on that we don't think the users want to compromise on. So we try to, build the tech around that.
Actually, I want to build up on what Michael said. Speed. Speed is very, very important because our users, they want the Web2 speeds, but still they want to be decentralized. And I think as an industry, we are sacrificing decentralization a little bit, like L2's central sequencers, right? It's not decentralized. And similarly, we wanted to lower our block times. Like I said, we are in Avalanche L1. We wanted to lower our block times from 2 seconds to 1 second. And in order to be able to do that, we have to move all of our validators into a single AWS region. So we didn't have to deal with the network latency. So our infra entirely is decentralized, but our infra provider is not. And I think you're not the only one that's going to be somewhat suffering the consequences, but everybody, even the bigger L1s, when you look into their infra providers, maybe they are not decentralized as much as we would like them to be.
Cool. Yeah, I think the theme of this discussion is trading speed for decentralization, which is like everyone's dealing with this at some level. So the way that Pyth works is our core product is actually decentralized. Like there is multiple nodes, right? And the data is verified through a complex system. But what we learned over the last, let's say, 12 months or so, is that our users, who are our customers, basically wanted a more, high performant product that would require us to peel back some of the decentralization. So we rolled out a product that it's called Laser, and it works on basically like 40 millisecond kind of finality, which is 10 times faster than the decentralized version of the product. And, end of the day, like, yes, it's a protocol, but like it needs to be profitable. And if your customers are asking for something slightly less decentralized, but ultimately they're going to use this as a core piece of their infrastructure, like that's what you got to do. Unless you want to just like, wax poetic about the importance of decentralization, you have to also run a business, and ultimately your customers are going to be the ones that dictate the direction. And then, I guess on this point, the most successful product of this cycle, which is Hyperliquid, runs in a very centralized fashion. So clearly, no one gives a shit about decentralization. They just want to use a liquid, perp dex. And, it's fine if, if some people want to go the more decentralized route. There's nothing wrong with that. It's a preference. But clearly, what I'm seeing personally with the conversations that we're having and what the market has said is that decentralization does not matter as much, and it's also a spectrum. It's not like 1 or 100. You could be like 50 or 60 or 70, right? And that's okay, right? So it's a very subjective thing. I think it depends on the protocol, right? Depends on the application, and everyone kind of just chooses their own adventure.
Yeah, I think you hit the nail on the head. I think unsurprisingly, people in Web3 are just like people in Web2 in the sense that they, above all, will prefer convenience and I want it now kind of thing. So, to talk about another, I guess similarly touchy subject, I wanted to move over to liquidity, right? So the moment that it leaves a chain, it fragments, and I think that this is undeniably, DeFi's constant headache, right? So maybe Genial, starting with you at the end, how are you addressing this in terms of more intelligently helping with liquidity flows across different ecosystems, across different chains? And in your opinion, at scale, what kind of impact could this have on DeFi as a whole?
Yeah. So our core business, as I mentioned, is as data and price feeds. But we do have another product that I manage called Express Relay, which is it's an on-chain RFQ for Solana. And the reason we decided to explore this path is because if you look at how on-chain liquidity traditionally works, it's typically through AMM or DEX, which has its own kind of pricing curve. And it's not necessarily very cost efficient to trade, certainly not in size. If you're gonna clip 100K or $1 million trades, you're gonna move the price, you're gonna pay a shitload of slippage, and it's just not gonna be a great experience. So we built out Express Relay in order to address some of these issues, and since there have been other competitive products that have come onto the market, other RFQs. But basically, the way it works is that we have a network of market makers or searchers or solvers. They bring in off-chain liquidity. So like they're basically bridging the liquidity from centralized exchanges and then servicing it on-chain. So for example, two of our biggest clients are Camino and Titan, right? So Camino has a swap function, which we help launch. And so when users are requesting a quote, our searchers on the back end are providing a price. And the reason this is important is because it's way more efficient in terms of pricing. And it just allows users to trade with minimal slippage and in most cases, no fees. And that's on the market order side. We do have limit orders as well. And like on-chain limit orders basically just don't exist. There's only a few protocols on a few exchanges that do this well, CowSwap being one of them. And so, so we, through our limit order product, we've allowed for people to execute $2, $3, $4 million trades. And those trades, they don't get filled by one market maker. Like they'll just get filled in chunks by all of the market makers. And like where else can you do a $2 million trade on chain and like pay like 20 bips? Like it just doesn't exist, right? So anyway, that's what we're doing.
Okay, I just want to contradict you a little bit. On-chain limit orders do exist in DEX a lot because we're an order book DEX. and you place your limit order and it gets executed at that price. If not, it sits on the order book. So for our solution, like I said, we are chain agnostic. So we have deposit contracts in all of the major EVM chains and L2s, and you can deposit your USDC, come to Dexalot, trade it, and withdraw it to Arbitrum, for example. At the same time, we have RFQ contracts in every single chain. If the liquidity moves from one chain to another, it really doesn't matter. Our RFQ contracts are already integrated with all the major aggregators. So if you're in Arbitrum and typing in UDOS, a price for Ethereum, you get a price from us, or you go to Solana, which we will be deploying in a couple of months, and you want to buy Ethereum, you will get the same price from Dexalot. So no matter which chain you move to, we are putting our, let's say, if we were an octopus, we were putting our tentacles almost in every chain, so we can service them all at the same time.
Yeah, I feel like this wraps really nicely into the previous question about trade-offs. RFQs, definitely, all the rage right now, and they're much more efficient with liquidity. That's the positive side, right? So, you can have centralized providers, market makers that, maybe they're institutions, they work directly with centralized exchanges, maybe they're even banks, and they can service things at size. They don't have to, rebalance liquidity pools. All that part of it is great. The part of it that's not so great is the decentralization trade-off, right? Maybe the permission trade-off. So you see, a lot more strict AML requirements coming from RFQ providers than you see from AMM pools. So those are some of the trade-offs that you're going to face. I'll take 1 minute to shout out a very cool feature that Thorchain built and launched a couple of years ago called streaming swaps. And what streaming swaps allow you to do is move a much larger trade through a liquidity pool in the AMM XYK model. But basically what happens is it breaks the trade up into a bunch of smaller swaps. So every block, you might do 1/20th of your swap, depending on the swap size. If it's super big, maybe you'll break it into 200 pieces. Another one of the trade-offs there is the time, right? So it's going to take a little bit longer to get your price execution, but it allows arbitrageurs to come in every single block in between and rebalance the pool while your swap is ongoing. So we've seen some really cool swaps happen through that mechanism where maybe you have a pool that's only 100K deep and people will still swap $1 million through it with something like 30 basis points of slippage. So that's one idea I wanted to shout out on chain, which I think is pretty cool. But yeah, I think nobody cares about decentralization right now, but it doesn't matter until it does, right? Nobody cares about Mt. Gox until it blows up. Nobody cares about FTX until they stole all your money. Right now, I think nobody cares that Hyperliquid is centralized until we have a black swan event. So let's wait. Let's see how it goes,
Regarding fragmented liquidity that you mentioned, in Rango, we believe that in order to achieve the best swap rates, we need to aggregate all of the liquidity that is available in DeFi. That's why we have integrated over 40 bridges in Rango. Some of them are dead right now, but in the course of the years. And hundreds of DEXs and DEX aggregators, intent-based protocols, mint and burn, burn and mint bridges like OFT bridge of layer 0, USDT 0, or CCTP. All of these protocols that Rango is built on helps with finding the best swap rate across chains, using all the available liquidity in DeFi and also in CeFi through intents.
Amazing, guys. So we're getting close to the end, sadly. But and instead of my last question, what I'd like to open up the floor with is maybe each of you, I think we have about 5 minutes, in around 60 to 90 seconds, you can give me either maybe something that you're working on that you're most excited about, or alternatively, on a hot take. It could be related to what you're working on or not. It could be you getting 60 seconds to vent to these lovely people and the 3,000 people watching. I'll leave that in your very capable hands, but we'll start from the end and come back this way.
Yeah, sure. So one of the exciting things that we launched recently was a partnership with a firm called Blue Ocean. So they're the world's largest overnight U.S. equities ATS or exchange. And so, as you guys know, market hours are like 9 to 4 or whatever it is in the States. So trading outside of market hours is, it's not easy. And so these guys kind of like bridge that gap overnight. And so essentially what this allows us to do is to have access to data from them on a 24/5 basis. And why this is interesting is now this enables equity perps, right? So like everyone knows about tokenized equities and all this stuff. And it's great. And I'm, shout out to Ondo and XStocks and all the guys that are working on tokenized equities. But I think the big unlock is going to be equity perps because what this enables is leverage, which is what everyone wants. Everyone wants leverage, and this is exactly what they're going to get. And we have a few very interesting projects that we're working with to enable this. So yeah, keep an eye out. Follow us at Pith Network on Twitter, and a lot of cool things coming.
I want to talk about OmniVolts. OmniVolts, it's going to be live in a couple of weeks. So what it means that we are going to revolutionize how you list your tokens in a multi-chain environment. We are on a multi-chain day, right? So you don't have to anymore think about where you want to launch your token. Is it Arbitrum? Is it Ethereum? Is it going to be Avalanche C chain? You don't have to worry about any of those. We are going to bring the simplicity of an AMM pool with the complexity of an order book market making. So with the RFQ contracts and the Dexalot L1, you're going to be able to open up a pool with a few clicks and you can pick the default protocol market maker, which we call OmniTrader. And it's going to do all the things in the background, publishing the prices in L1, as well as publishing prices to all the aggregators in all the EVM chains that we support, market make, and rebalance between chains all at the same time in the background. If you stick around in the next keynotes, I am the keynote speaker in the next time in 5 minutes, so I'll tell you about it in more detail.
One I'm really excited about that we just launched in the last month is Zcash. Why am I excited about Zcash? Well, I mentioned already that our goal is to actually get users to use crypto. And I think that, we've done a great job as an industry of building better financial products, better forms of money than what the TradFi world can offer. I really mean that. I think that, what exists in DeFi today is really incredible, what's been built in a short period of time. But if we want to onboard, 1 billion users, and we really want people to use these products on a daily basis for things like, paying their bills, living their daily life, then we need to have privacy. So that's why I'm really excited that we're offering Zcash in our API now. And I think it's just, the first step for us as an API is stepping out into privacy chains. But I really think that that's going to be a major important step for this industry to take in order to get that next billion of adoption, is to be able to offer users privacy so that everyone you interact with isn't able to see, how much money do you have? What's your net worth? What are all the trades that you've done? Especially with the rise of AI tooling and things like that, there's not going to be any way to hide, right? You're not going to need to go to Etherscan. It's just going to show the profile of everything about you. So privacy is going to be, I think, super critical for the next phase of growth.
I'll try to answer those in a short time. I think
Take your time.
my hot take is that I think finally the DeFi ecosystem is going toward what it's originally meant to be. With the launch of different exchanges, decentralized exchanges that are able to take over not only the centralized exchanges, but also other TradFi brokers and organizations. I think we are in the not overnight, but in definitely in 1 year we would be taking a major portion of the market of the TradFi and also creating new opportunities. In Rango, what I'm interested at, I'm really excited that we're building is the gasless swaps. In the next quarter, we are releasing gasless swaps, not on EVM chains, on EVM, Solana, Ton, Sui, and then Starknet. So we are aiming to bring the cross-chain swap experience one step further with abstracting the gas.
Awesome, guys. Well, first of all, thank you to my amazing panelists. Appreciate your thoughts and your time, and thank you all for joining us today. We'll see you at the next Multichain Day. Cheers.